Guelph real estate investing, or I mean, real estate investing in the Guelph area, let's say. It's been a little bit slower. We haven't seen a lot of opportunities. Anybody that's waiting for an 1155 Gordon townhome, we had the one come up last summer that needed, we kind of pegged it at $60,000 worth of work. Turns out we had a client who bought it, and we got out for about 45,000. It will be rented next year for $1,100 a month plus utilities, and he's all into the house for about 765. So in hindsight, again, for the right investor at the right time, that that play worked out. But it's been the only unit in the 1155 complex for sale in the last 2 years that we recommended purchasing with the right layout. Suffice to say, opportunities have been a bit more limited. Some of the stuff that's coming in the market, we're definitely seeing strong demand from some developers trying to accumulate land closer to campus. We've been seeing some big numbers for dirt paid there. The university has included an announcement to add 5,000 beds to their student housing supply over the next 10 years. Ambitious, and we'll see if it actually happens over a 10-year span. And so some investors might be thinking, boy, like if the university is coming back into housing and there's some big money players in the game, like maybe this isn't the time for me to get into investing in real estate. Ultimately, 5,000 beds over 10 years means you're adding about 500 beds a year, and the university grew its enrollment by 1,300 students last year. So we don't see any of the stuff from the university coming to the market and having a meaningful impact on the supply-demand fundamentals. I think we'll see a little bit more of it when the private investors come in. We've got a couple of developments close to campus, and the province mandating added density. There is going to be a lot more housing located close to campus. If you ever go to Waterloo, a decade ago, they were all over this in terms of allowing more density closer to campus. I've toured some of the buildings where you'll have a 5-unit building that's got an 8-unit building that's got 5-bedroom units. So you're housing 40 students on like a regular residential building lot. You're making a ton of money, especially when it's right across from campus. And there's a lot of value that can be created there. So we are in an environment where we are expecting things to gravitate a little bit closer to campus or major transit centers. I think the Stone Road Mall is still going to be an area where there's going to be a fair amount of student housing. So things in those neighborhoods are great. And that's not to say that if you had something that's at a bit of an outlier, not a great location, that you won't be able to rent it for premium rents maybe not premium rents, but for rents that are more than enough to turn yourself a profit as an investor for probably the foreseeable future, at least the next 5 years, because any of the new high density developments that have been announced or are in the pipeline still haven't broken ground. And I mean, really, from the time a shovel goes into the ground to the time they're housing students is at least 3 years. We haven't seen anything coming yet. So we figure it's just a little bit of a different feel if you're looking at something where you think, 7 to 10 years from now, there may be a less demand from students to rent something like that. Fair enough. But are there other opportunities with that property? I mean, I think looking at a lot of the new supply coming to the market, we're talking about 1 and 2 bedroom 1 and 2 bedroom condos, some stacked townhouses that might have 3 bedrooms, no basement, and only 1 parking space, no garages. And I mean, to add more housing supply, we've seen people adding basement apartments. And the RDUs, the laneway housing, which is kind of a neat piece that we'll touch on a bit later. So when we're putting up ads for basement apartments, 1 and 2 bedroom condos, we're finding the uptick a little bit slower because there's more opportunity, and that there's only so many people that can actually live in a 1 or a 2 bedroom condo, or they are okay with just 1 parking space, or they want to live in a basement. And so, I mean, we've had a lot of people reach out to our leasing team in the last maybe 6-8 months and saying, normally we've rented everything ourselves and it's been no problem. We put up an ad and boom, it's done. And they said, now, like, it's taken a while. It's still vacant. I haven't been able to find somebody. I've dropped my price and we're not really sure what to do. And I think that's somewhere where we can help to a certain degree. I mean, ultimately, pricing and what the actual location offers is what is going to get it rented, and we can kind of help you navigate through that. We are doing a lot more leasing on realtor.ca. Everybody just, used to use Kijiji Facebook Marketplace, the Canon to rent stuff. We're finding better quality tenants through Realtor.ca, especially for some of the stuff that trends out of the student demographic and into kind of your young professionals or just family demographic of tenants. A lot more success just using some of the more traditional channels that you haven't seen, like Realtor.ca. And all that to say, ultimately, we're still in a position where the supply-demand fundamentals are going to be bullish for real estate. But if back to kind of the argument about where assets are going to be needed in the next 5 to 7 years, we sold or purchased a place on McElderry Road, which is in a nice family subdivision, a great spot for kind of a mix of students and families near some schools, just adjacent to transit. That location, I think, probably the next 5 to 7 years, no problem as a student rental. 10 to 15 years from now might be a little bit more difficult to rent to a group of 6 students. However, in 10 to 15 years, you will have paid down at least half the mortgage on a detached home on a 50 by 120 foot lot, which is large by today's new build standards. Really nice neighborhood, and in a market where there just is not a lot of detached housing left for sale, or everything else you're competing with has condo fees, for example. I think that asset's going to continue to grow in value and outperform the rest of the market. And I think the client who purchased it is thrilled to own it. And I mean, we're doing the management. They're making about $1,000 a month after paying for all of their bills and for our services. So on the laneway housing discussion, if you're interested in that type of development, so essentially like what people are doing is building about an 850 square foot house in the backyard of their current home. You can add up to 2 units in that, so in theory you could get 2 3-bedroom units in that. You have to call them 2-bedroom plus den, but essentially 3-bedroom units. And so you could put a structure in your backyard that you could rent for about $6,000. Pros and cons to it. We'd love to take you through 1 or 2 of them that are currently under development or have been recently finished. And we can debate the pros and cons and how to do that. I mean, we can definitely set up the financing, provide plans, and show you how that can be done. At the same time, we haven't built any yet, and I think there's a reason for that. We want the zoning to settle out a little bit, and if we're devoting that kind of capital into real estate right now, we're looking to acquire more of it, purchase more properties, some that will have setups for that type of development in the future. But the triplex and fourplex designs that we're currently working on in conjunction with ANC, local family company, they don't have detached suites. Everything is built kind of in one structure. And I think you can add a little bit more density to that. And boy, to be honest, if you've seen some of the accessory units that are built in backyards, not exactly loving the way that it makes a neighborhood look. But this is the direction that our municipal and federal governments, or sort of municipal and provincial governments, have decided to grow and expand. So we're here to help with that and try and solve the housing crisis one step at a time. So, I mean, we're a little bit more selective in opportunities. We haven't seen a lot of good ones. A lot of the opportunities we have picked up or that we do see, they're a little bit beat up, to be honest. Now, generally, when we're looking at something that needs a little bit of work over time, it's something that we will be able to do with the cash flow from the property and something that we can kind of manage and do for you. But that's typically, in my experience in the last year or two, showing investors the opportunities are out there. You got to have a bit of a stomach for the condition of some of the properties. But there are still lots of ways, especially if your goal is really to secure housing for your kids who are going to school. We've definitely got some options. We can get you 4 to 5 bedrooms on a bus route to campus with a yard and a nice, clean living space. We could do that tomorrow. In terms of investments that we think are going to, provide enhanced returns in the future. Again, a little bit more few and far between, and price points are maybe closer to $1 million or slightly above, where things start to get a little bit more interesting. But of course, the bigger the numbers, the bigger returns. That's typically how things work. With that being said, again, there are typically always, I don't want to say always, but there are a lot of opportunities that we'll see kind of a couple a month where we can purchase these assets, manage them for you. They will cash flow, and you sign a paper once. Just make sure the account's in order, and we do the rest of the work for you. We find the tenants, we manage the property. The tenants don't even know you exist. That is an opportunity that still exists in the market, and anybody that wants to own one of the houses that I own and manage, it's always an opportunity. You just have to reach out and ask. On the financing end of things, I just want to make sure that I convey this accurately. We are set up to make sure that you can use your mortgage as a tool, that you can get the most out of your financing. And the reason that we do this is because I have had too many experiences where clients have been essentially failed by the people that have provided the financing, haven't necessarily been given the best advice. And so I set up a business to do just that. It also allows us to do some things out of the box. We are often providing short-term financing to clients, bridge financing. A lot of that stuff we do kind of free of charge to just smooth things over. I don't think your mortgage broker, whoever you dealt with for your last mortgage, is going to lend you $200,000 on a handshake. But if it is in your best interest to do so, and we can draw out a path and business case to make it work, yeah, we'll do that. Clients who have missed closings before, if you are our client, we'll make sure that you hit your closing, even if we have to fund it ourselves. We do have some ability to do that, and the financing arm that we work with is set up specifically to help investors, to help people buy multiple properties, to help people buy student rentals at 80% loan to value, to help people refinance student rentals where you're worried about an appraiser going through telling the bank it's a student rental and the bank just declines the mortgage altogether. No. We'll meet the appraiser there. We'll give him a handshake and a high five, tell him what the numbers need to be, and that he's not allowed to say the student word. We have ways to make applications work, and we work with lenders who are aware of what we're doing and see the strength in our business model and in our client relationships, and are more willing to play ball. We're also willing to sit down and map things out, even when we don't think it's going to be something that we can offer help with, but we know that your existing bank could do these things for you. We're happy to provide that service. We're less worried about generating a revenue on the mortgage side, more worried about providing solutions that work for our clients. And again, the experiences that I've had personally, being I was a senior lender at one of the big 5 Canadian institutions for 5 years, and so I learned a lot about financing at that point, and just my own ability to navigate mortgages for the last 25 years, getting mortgages when I was a student, recently self-employed, when I already owned 5 or 10 rental properties and was told, no, you can't, no, you can't, no, you can't. You just keep moving until you find somebody who says, yes, you can. And that is the position we are in now, is yes, we can. So if you've been told, no, we don't think we can do this, unfortunately you don't qualify, we'd be more than happy to provide a second opinion. Really, we'd love to be your first opinion and the only one you're going to need, but understand that existing relationships sometimes can be hard to overcome. And normally I would say don't go to your real estate agent for mortgage advice, but I'm trying to be a little bit different than the average real estate agent. And also, I'm not the guy that does the mortgages. We have a underwriter with 15 years of experience who's doing that. And my role in the process is largely to oversee, make sure we're getting the right advice, to loan the money if that's what is needed, or to otherwise work with our existing pathways to strategize and again, find ways to make sure we get it done. Do have some other interesting investing opportunities in the real estate development space. Definitely some opportunities for private money, opportunities for you to leverage money in your RSP to provide mortgages to yourself, your business, your family, your kids. Local developers who are just looking for capital. We can help to provide a lot of that stuff. So if you don't want to own rental properties, you don't want to rent to students, but you do see money being made in real estate, we can definitely find ways to put your home equity to work, and to earn hopefully outsized returns, or at least stable returns, through loaning money into real estate. And typically anytime we're looking at that, it's opportunities that I have personally reviewed and would be okay lending my own money to. Anyways, it goes without saying, anytime you're running into issues with your real estate, please reach out. Again, our property management services are for our clients specifically. And the biggest way we generally help on the management side is just navigating student leasing. There's been a lot of things that have evolved and changed within how leases are viewed by the Residential Tenancy Act when there's multiple tenants involved. And I mean, every tenant now Googles and knows their rights, and you can't kick me out, you can't raise my rent, you can't change my lease. And so one of our biggest strengths in the property management side is navigating through student leasing to ensure that you're getting the best rents wherever possible. Anyways, this is just way too long anyways, and if you've read or listened this far, thanks. Sorry, I really hope you have something better to do once I turn this off. Let's grab lunch. Let's grab a coffee together. Let's go look at a house and we can just talk. That's my job. I do it all the time, and I'd be happy to do it with you. So if you need anything else, reach out. Otherwise, we'll keep sending the opportunities as we see them. But if you want to be first on the list for those opportunities, you got to reach out and you got to say, yep, this is what I want. My financing's ready, or let's get my financing ready. Here we go. Because once the opportunities do appear, you're going to need to be prepared, and it's going to move quickly. So enjoy 2025. We will continue to share some of the cool things we're doing, some of the developments we've got on, where we're at with some of the things we bought in the last year or two, some successes for our clients. And again, we're here to solve problems. So if you have any, reach out. Happy 2025, and we'll talk to you in the spring.